caution. So cautiously optimistic on some of these names. Hope that the budget has enough and more for this momentum to continue on some of these names.
All right, big morning, big morning. First few minutes have looked pretty decent. Rahul Arora is joining in. He's CEO, Nirmal Bang, Institutional Equities. Rahul, very good morning to you. And interesting way to spend a Saturday, especially today. Would you say that the fact that the market has shown some amount of confidence, faith and optimism in what we'll hear in the next couple of hours is a good sign to start off with?
Morning, Tamanna. Thank you for having me on the show. I think it was quite a salute going into the budget, right, yesterday. And I think, corporate earnings probably had a lot to do with it. But I think no negative news will be positive news. The market has seen a reasonable correction. I think stocks have fallen 2x or 3x of what the actual market percentage fall is. So I think, I don't think there's too much room for tinkering. I think, most of the numbers are consensus. From a market borrowing perspective, 14 and 11 lakh crores are a gross and net, 4.5% fiscal deficit. We're expecting about a 10% growth in capex. Not too much more than that, I think. Even on the taxation front, it is pretty much personal income taxes that are driving tax growth. So I don't think there's too much of a tinkering that can be done there, because the growth that you're seeing of 10-12% in direct taxes is not coming that much from corporate taxes or anything else so much as it is from individual income taxes. So hopefully maybe at the bottom of the pyramid, Tamanna, which is something that has been probably spoken about ad nauseum, because if you even look at the consumer companies' results, even this quarter they're struggling. There's no question. And the only reason you keep talking about tax breaks or doing something at the bottom of the pyramid is to revive consumption. So I think they'll keep doing what they are on the manufacturing side of the economy. The good part is that the defense companies so far have delivered on earnings. The EMS companies as well have delivered. There's been a lot of focus on PLI there. And valuations in both these sectors have become reasonable. So I think from a sectoral perspective, I'd be looking at consumer, EMS and defense from this budget. But I think on the broad arithmetic, a 10-12% tax growth, 4.5% fiscal deficit, and probably yields inching closer to 6.5% as we go along. That should probably be the summation of the budget. Hopefully nothing negative. We'll digest this and move back to corporate earnings on Monday.
Rahul, good morning. And you may or may not be able to see, but the studio out here is raising a toast to your birthday today. So many, many happy returns of the day. Have a great one. And may the FM give you a birthday gift as well.
Thank you so much, Neeraj Bhai. I think my biggest gift over the last many years has been having friends and brothers like you who have, that we wish for each other's good health, success and prosperity. And that means more to me than anything else. So thank you so much for remembering and acknowledging it on national TV, Neeraj. Really appreciate it.
Yeah, Rahul, we're waiting for the birthday cake in office. Now that you have not
Tamanna, I would have personally bought it, but the BKC traffic is so miserable these days that getting in and out would be half the birthday spent. But I will have one sent across soon enough. I promise you that.
We'll have the virtual cake on your behalf.
Yeah, but before I ask my question, Kush, you want to ask something too?
Rahul, first up, a very happy birthday. See, a lot of us market participants have these superstitions, right? So, do you have one where मेरे birthday पे market ऊपर जाता है और मेरे birthday पे market नीचे जाता है? Do you have one of those? I'm keen to listen if you've got one or empirical evidence.
This is the question of the morning.
No superstitions as such, but the only thing that I've done for many years, I can tell you, is I don't leave my house without touching my mother's feet, and I don't leave my house without seeing Saurav Ganguly and Novak Djokovic's photographs. These are three people that really inspire me, and no more superstitions beyond that. I just hope we have a good day at the bourses, and
So
we
Rahul,
can have a good Saturday evening for all of us.
Yeah, most certainly. Rahul, very quickly. So if there is no tinkering with taxes, long-term, short-term capital gains, and if the capex estimates turn out to be okay, would that be a budget well done?
Absolutely, no question. And I think like I said, if there's no negative surprise, I think, even the pharma earnings that have started coming in are looking all right. I don't see any reason why the market can't rally today and going into Monday as well. Because I think, Neeraj, let's put it into perspective. I think the economic survey has been too optimistic in terms of projecting growth. 6.3 to 6.8% is too optimistic on current evidence. But let's say that number is closer to, say, 6.2%. We're still the fastest growing economy in the world. Yes, China valuations had become cheaper relative to India valuations a while back. And yes, of course, some monies have gone into the US after Trump has been elected. But I think these are more short-term phenomena. I don't think an Indian market that's heading towards a 4% fiscal deficit in a year or two from now, maybe by FY 27-28 towards the FRBM target, and a 6% growth. And Neeraj, I think this budget will probably set the tone. And we've got some hints from the recent Reserve Bank of India's operations that we potentially may be looking at a beginning of a small rate cut cycle, but that may also augur well. So I think all things considered, the start of the result season wasn't that good, but like you rightly said, if there's nothing negative, combined with what our growth projections and earnings are, I don't see any reason why the market could not have found a short-term bottom.
Rahul, what were you thinking when you heard about all the tariff noise this morning? And perhaps you won't see an impact today. Today is all about the budget, but 25% on Mexico and Canada, 10% additional on China, and then a promise of round 2 on the on the 18th of Feb, and a lot more actually.
So I think there are two parts to this, Tamanna. One of this is not entirely unknown. I think if you've heard his speeches and even the presidential debates that he has had in the run-up to the US elections, he has spoken about this ad nauseum, and I think there have been enough and more articles written about it in the New York Times and Washington Post over the last many months. So I don't think this has come as a surprise. If anything, India could be a beneficiary on the items these tariffs are levied on, because if there is an alternate country that they look to source these or procure these materials from, and India is a producer of that, we could stand to benefit. I think we have made a great start on the External Affairs Ministry with speaking to the counterparts in the US by allowing ourselves to take back illegal immigrants there. I think that will go a long way in terms of easing tariff concerns on a market like India. Add to that, our currency has been relatively stable. Our external sector has been very stable from the current account deficit standpoint. So I think the macros and the most important point, Tamanna, I think if you look at the deficit that China has with the United States, I think it is close to $350 billion. India is just about $45 billion, give or take. So we are a fraction of what China is. So I don't think we'll go anywhere close to that. So anything that affects global trade that India produces is only going to stand us in good stead. So it is very similar to the China plus one theory that was spoken about at the beginning of the lockdown in COVID. We did benefit through sectors like EMS and chemicals, and I don't see any reason why that cannot persist going forward. And last point on that, from a foreign flows perspective, if you're looking at countries or global large investors that are looking to allocate capital, you would not go to countries where tariffs are being applied, because you would view it as a destabilizing equation between the US and that country. And if the US and India are able to find that equilibrium, we'll be incremental beneficiaries of foreign flows to that effect as well.
Rahul, Harsh also joining in. Curious to know, last 3 to 4 budgets, the focus has been on government capex. But the handover to private capex was always expected to happen, but hasn't really happened. That's where I believe somewhere we've fallen short. What's going to be that change in this budget that you're expecting to actually drive private capex?
So you've touched on a very important point, and it's a very good observation. I think if you look at the CMI announcements for the financial year, if you look at center, private sector, and state, they're all down 20 to 30% in terms of announcements. I think a bulk of the announcements that had happened in the previous fiscal year, and I'm talking pre-Hindenburg, were predominantly by one group that was looking at, which is the Adani group, which was making a lot of announcements into alternate energy, ports, so on and so forth. So capex was pretty much being driven and announcements by one or two large business groups in the country. That took a little bit of a backseat, but I don't see any reason why that cannot revive in a very substantial way. I think the point about capex growth that you make, that's going to be, and the reason I say 10% is because the center, in their calculations, they also factor in the amount that they're giving to states for their capex in their capital expenditure number. And if you see, a lot of states have actually used that amount of money for what we would call populist measures. So and because we've had a lot of state elections, let's be fair. So I'm not sure how much the government of India would be, incrementally keen to devolve to the states from what they consider capital expenditure. But you're absolutely right, because I think, to the point that we were discussing with Tamanna a little earlier, when you have a period where global trade is going to be in a state of influx, the X and M component of GDP is not going to be in your control. So you're left with, consumption, investment, which is government and private sector. And then, of course, you have government spending. private capex is not happening in a material way, neither is consumption. So the onus of GDP growth is going to lie on government reviving capex. The other important part is NHAI awardings haven't been that great over the last 2 years. And if you look at most road contractors, they haven't been reporting the best of results as well. So I would not be surprised if the government decides to make some more announcements to that effect, and they center it more around increasing PLI schemes and look at giving a boost to sectors like EMS as well as defense in this sector, and so also for roads. I think Mr. Gadkari was doing a remarkable job. It's gone off the boil the last couple of years, but there's no reason to suggest why it can't come back in a material way.
Okay. Yeah, interesting piece. Okay, Rahul, stay on. Let's stay on Sony. Just before we let you go, though, 15 minutes into trade, is the screen looking okay on this budget day? Is there anything specific you'd like to point out?
Absolutely, Neeraj. I think it's looking quite more than decent. It has not given you any sort of a volatile movement till now. VIX is cooling off. Like I said, it could be more of a sideways trade, and stock specific is also actually performing quite well. One particular stock which has caught my eye would be Hudco, which is actually closed above a 200 exponential moving average, and a positional basis looking quite strong. So possibility that stock can actually head towards the 250 plus levels quite strong. I think just hold on to the stock. 225 very good supports, and that's all from the stock specific and the markets. Let's hope out the budget plays out well, and not too much of a volatile movement for the day.
Yeah, well, that would be welcome. Less volatility on budget day. Usually we don't see that, but let's wait and watch. But Sony, take a moment to thank you for joining. I really appreciate your time this morning, by the way.
Likewise, thank you so much for having me.
And we hope to have you back in soon.
Absolutely. Sooner than soon.
All right,
very short.
Very short break. So much happening on the other side. We have a fantastic lineup of speakers. When we come back, stay tuned. The day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. STT definitely needs to change.
Old tax regime.
The 1991 budget was truly a game changer.
I mean, the rest is history.
Union budget.
Budgets. General elections.
Union budget.
2 more, Yashwant Sinha and P. Chidambaram.
Arun Jaitley.
Arun Jaitley, I'd have to say.
I think Manmohan Singh for sure because of the iconic 1991 budget speech.
STT definitely needs to change, because now if returns are not that good, it'll start pinching people.
Income tax.
I think income tax because that's what matters to me.
Old tax regime.
Depends. Old tax regime currently.
I would say healthcare and education.
I'd believe infra.
Oh, certainly more allocation towards infrastructure. That's what's keeping the wheels turning right now.
Game changer, but not in a positive way, was the budget when farm loans were waived off.
There are a couple of them actually. 1991, Manmohan Singh. That was the budget which opened up the economy. Then 97, Chidambaram, who reduced the tax rate from 40% to 30%. In 2001, I think, if I'm not wrong, Yashwant Sinha, who reduced all the duties on customs that led to the computer age or the IT age kicking off in India?
I think the budget in 2022, where capex was done in a very big fashion.
There were several actually, 1991.
Welcome back. Very special day. We have on a trading Saturday the budget of 2025 to be introduced. But while we are at it, let me quickly introduce Radhika Gupta joining us, MD CEO at Edelweiss Mutual Fund, and we also have Pankaj Murarka, CIO at Renaissance Investment Managers, also joining us. Always great having you all. Even more special when it's in person. So thank you so much, both of you, for joining us. But I'm going to go to Parag. Parag, you know, the one thing or the one stock which is standing out despite tepid numbers is IndusInd Bank. Do you believe a bottom here has been made? There's been several questions, one-time price to book, 1 year forward. Despite the poor numbers, stock is up 2%. So just a quick view on that one.
No, I think stock was oversold, definitely, and the numbers expected were horrible, and so it has not come so much horrible. So I would say that, and if you must have noticed, now the result reactions are often based on the positioning before that day, right? And so that positioning swings. But as I told you, because whatever. And of course, there are some good positive commentaries coming out of at least in microfinance sector from some states. But definitely we are more focused on secured lenders, and that is why we hold ICICIs of the world and, as I told you, SBI PNBs of the world.
Yeah, lest Parag Thakkar think that we are talking to him only about banks. That's not the case. It's just that financials are dominating the conversation space right now. And just keep in mind that I think his earlier view was that PSU banks might have a different cycle this time around than what's seen in the past. It might well be the cycle of the PSUs. We'll actually talk about that with Pankaj Murarka as well. So as Harsh getting in both Pankaj and Radhika in the setup as well. And good morning from my end to both of you as well. Radhika, are you a contraindicator today? No, I'm just kidding.
I'm an indicator of low expectations that will be beaten by this budget.
That's great.
The optimistic answer.
I should have known I can't beat you at
You
words.
can't beat me. I've done reality TV. You don't beat me at this.
That's true. Let me add this. You're wearing Republican colors, and it's all
Oh
about
my-
what Trump is doing.
Trump is an alumni of my school, so let me leave it at that. You won't beat me on that one also. We went to the same college.
Okay, but anyways, so now all levity aside, how do you feel, Radhika? The market seems to be going into the budget with not too much of expectation, and that's a good thing.
Yes.
What is it that the budget can do to upset the apple cart? Let me reverse the thing per se.
So I think this is a unique budget in the sense that it's one of the few budgets where you're going in the last few years with economic uncertainty. Otherwise, you were going into the budget on a reasonably strong footing. Now, I think the market has always wanted a standard set of things from the budget. Fiscal prudence, which they've done a decent job of. So I think the one thing that the market will look at very carefully is capex, because if you look at this year's number of capex of 11 lakh crores, even if we do whatever we do, we'll be far off from meeting it. So I think the market will look at that. Not doing anything on consumption perhaps may upset the market, because given the conditions we are going into, some movement on consumption, what can really upset the market is, I think, further tax change, which I think is unlikely to happen, but really spurring up consumption. I mean, I think, Neeraj, the meta worry is that over the last few years, with everything you've done, why hasn't private sector capex started to happen? That animal spirit of the Indian economy, why hasn't that kicked off?
What's your hot take on that?
I think people are, it's chicken and egg. I think people are waiting for demand to kick in order to start taking those bets. And demand is not kicking in because people are not taking those bets. And you've done things. You've had corporate tax cuts, you've had PLI schemes to a certain extent. But I think that's the meta worry.
Pankaj, what's your take? Yes, we haven't seen capex kick off, but December was a good month for capex. Some very strong numbers that came out. Can the budget fortify that, or will there be disappointment?
No, I think, Neeraj, let's acknowledge the fact we're coming at a stage where private investments is weak. And there is a cyclical slowdown in the economy at 6.5%. I don't think so. We are discussing whether the economy is in a slowdown.
It is.
Yeah.
It is.
Yeah.
That's not a point of discussion.
Yeah.
We need to acknowledge that.
No, sorry, just an aside, because earlier Rahul Arora said that even 6.3 is optimistic.
No, I don't think so. I am not so bearish. I think India's base case growth is somewhere around 6.5%, which is what the RBI also believes, and we are somewhere there. But I certainly think we can do much better in terms of our growth. Given the fact that we're coming on this backdrop, there are certain positives that we as an economy bring to the table. We are at an environment where when we talk about corporate capex is not picked up, we need to acknowledge, I have now come to a conclusion that in a cyclically slowdown economy, there is a structural slowdown in private sector capex. Because it's been 15 years, I have not seen annual spreads in corporate India. The last time I saw that was in 2006 and 7.
Wow.
It's been out 17 years, I have not seen that. Something seriously needs to be done. If you look at the private sector capex, the government has done its bit to an extent because the central government capex has gone from 3.5 lakh crores to 10.5 lakh crores this year, even after undershooting their budget estimates. It's gone 3x, it's grown at 16% CAGR. The private sector, government was hoping that the private sector will take over the baton. They have not. The environment or the mood when I talk to corporate CEOs still is of measured or cautious optimism. They're optimists, but they're very measured in their approach, and they don't want to put their... The good thing is, but private sector balance sheet and the financial sector, banks balance sheet are in a very healthy state. The question is what is holding back the animal spirit. In segments of economy where the government have stepped in, investments have actually picked up. So you look at defense. Defense has done phenomenally well over the last 4 years because the government has stepped in. Railway capex has done well because the government has stepped in. You look at PLI. So all the manufacturing driven capex has really picked up, driven by incentives from PLI. I think what I would expect, my expectation going into the budget, given the fact, while this is the first budget of the new government, but we also need to acknowledge that it is the 12th budget. It's a government in continuity. It's a government in succession. You can't call it a first budget. To me, it's the 12th budget. I would like them to play, I would expect, given the fact that the mood of corporate India is slightly more cautious or cautiously optimistic, government needs to take the lead. I would be very disappointed if it's not a very bold budget, because you would not get this opportunity again. The government needs to take the lead.
By bold, okay, 2-3 things which are bold. Let's razor sharp.
Aggressively double down on reviving investment in the economy. Whatever they did has helped, but probably we need on a much bigger scale. So if government bought PLI linked incentive in 2020 and 21, and over the last 3 or 4 years they've expanded that has really helped, that has picked up. But we need much more bolder. I think double down on investment related incentives in the economy.
But do we have that bandwidth? Sorry.
Resources are there.
Fair.
While we still have to manage our fiscal deficit, resources are there. And government can find resources. So aggressively, you just have to double down on that. And we are at a stage where some of the major economies, let's say the biggest manufacturing capital of the world, China is facing trade headwinds. India is unlikely to face those kind of trade headwinds from US. So we have an advantage from a global perspective where global companies are wanting to shift their supply chain to India.
Yeah.
We cannot let go of this opportunity. I must acknowledge we have missed the bus, or we have let go of this opportunity multiple times in the last 20 years. Okay. We should not let go, drop the ball this time. Wow. We need to go out and seize that.
What a strong statement there. In fact,
if we don't do that, I'm sorry, we are missing the bus again. So we need to do that. At the same time, we need to acknowledge that we are coming out of an environment where real incomes have declined. Household needs help. So you need to do something for the middle class. Some tax reduction for the middle class is important because you need to help, because on real income of household have declined in the last 3 or 4 years. Yeah. Inflation has been pretty high or pretty steep. So you have to play, just to summarize, you have to play on all fronts. I would want a finance minister who's playing more like a Sehwag than a Rahul Dravid today. and you just can't let go of this opportunity.
So just to what Pankaj said and what Radhika also mentioned, just connecting the dots between the two, and of course I completely agree with middle class getting squeezed out due to inflation, and so the demand has taken a hit, and so private sector capex is not coming in. So for example, just to take from Pankaj's example, electronics we have done really well, right? Mobiles, because we are already consuming mobiles, we are importing it. Now we are manufacturing it. So for mobile, the demand was already there in the system, and we have created a incentivized structure in terms of PLI to manufacture it. So now we have to create demand. Actually, we need a demand booster in many sectors, I would say.
I would go to the extent that while as per the FRBM, we are supposed to get to a fiscal deficit of 4.5% next year in terms of this as B estimate. Even if she pushes the target out by 1 year, but if she doubles down on investments and reviving economy, the market and the economy will be extremely
Unlikely.
Very strict on the fiscal deficit target.
which is why I'm saying we need out-of-the-box solutions. The economy is in the middle of a slowdown.
Let's
You have to do unlikely things.
Okay, let's ask another guest about whether this has happened, and Radhika would have strong views here, but I need to get in Vikas Khemani in the conversation. By the way, I also need to thank Rahul Arora. Rahul, please enjoy your birthday. We've kept you waiting, but thank you and enjoy your birthday. But Vikas Khemani, founder of Carnelian Asset Management and Advisors with us. Vikas, the mood on the table out here in the studio is that there needs to be maybe some unlikely things done in order to revive animal spirits, because like it or not, private capex has not turned out, right? What is it that can be done within the limited fiscal space that the finance minister has?
Hi, Neeraj. I think, first of all, I'm sure there are lots of initiatives government will take or is taking will take to kind of push the economy forward. Of course, government front-ended lots of public sector investments has been doing. I think first half of the economy, maybe due to elections, infrastructure investments slowed down or government spending slowed down, and I think that got compounded actually by squeezing the liquidity, and that is where I think the recent measures of RBI is quite helpful. I think, in my opinion, I am not as negative as some of the other co-panelists on the private capex. I do believe that it's going in the right direction. Of course, there can always be more. There's no doubt on that. The key reflection of that is in the order books of all the companies. I think most companies are expanding, but obviously you do not want to see the capex cycle of the previous time where reckless lending happened and that eventually created a problem in the banking system. So I think very often we compare with the China model and push that kind of investment cycle here. We must not forget that India is also a very ROE conscious market. If tomorrow promoters or companies do investments, keeping the target of the China's ROE or other countries' ROE, I think the markets won't like it, right? So I think that clearly the orderly capex should happen and is happening. The only thing probably one is not feeling as much is because it is not reflecting the credit cycle, but at the same time that is getting funded through internal accruals and the equity. So I do believe that. I think, of course, a lot can happen to accelerate investment cycle, and I'm sure government is conscious, and there would be some measures on the in the budget to push that forward. And other thing I would make is that actually what numbers they put in the budget really doesn't make as much difference as much as the execution, because we have seen that execution is what is going to drive the real thing, and I think that matters the most. And at least I was reading some article somewhere yesterday that government plans to spend a lot of money in this current quarter to kind of where they lost out in the first half of the year. So I guess some of those things are being done. So I would say that we are on the right track.
Also joining in, I want a quick take. So from a global standpoint, demand seems to be difficult in terms of recovery. So we are relying on domestic. Now we've spoken for too long about how GDP per capita has to go up. It's not really moving in a significant fashion when you're looking at it over the last 5 years as well. What is it going to take in this budget to get there?
I think clearly, in my opinion, the income tax rates in India, especially the personal income tax rate in India, is very high, and I think middle class takes very, very big knock of it. In my opinion, even the maximum marginal rate is very, very high. So we definitely need to bring down the income tax rate. like government did bring down the corporate income tax to a reasonable level. I think that needs to happen, and if that happens, I'm sure it will be very, very positive sentiment, which will boost consumption, which will boost also ease the bit of pressure on the middle class. So I think that is one thing, in my opinion, and I guess that's the most likely outcome of this budget. Rest, I would say that government has been doing a lot more great things in terms of pushing forward the same agenda, execute more faster, more sharper. That is, in my opinion, far more important. And identification of the problem is there, but execution, I think, should be, in my opinion, a lot more accelerated.
Okay, let's do a quick round the table. And of course with Vikas on what is the top expectation on this budget, and no prizes for getting it right, but bragging rights. So, so let me start with you, Pankaj. You talked about a lot of things that you think should happen or hope will happen. What do you think will actually happen? One thing.
I think there'll be some relief for middle class households. So essentially, I'm expecting for some relief on personal taxes, expanding of the exemption limits or lower tax rates on the middle income household. I think there's a real acknowledgement. It's been about 3 or 4 years where real incomes for middle income households have declined. So we really need to solve that to help our consumption, because
and a big hint from Prime Minister.
Yeah, exactly.
Mahalakshmi.
I think
Mahalakshmi ki
I hope
kripa.
so. Yeah, so I hope so. Mahalakshmi, Goddess Lakshmi, really.
Gives it. Okay, so tax cut for middle class. Radhika, what about you?
I'll expand it and say, he mentioned bold thinking on capex. I think you should do really bold thinking on this tax cut and middle class. So it's not incremental 20,000 rupee, 30,000 rupee. I don't think that's the need of the hour. I think severe reduction in tax slabs, really rethinking some of these old limits, like the investment limit is, I think, 1.5 lakh. The interest on housing, I mean, it hasn't been revised for years and years.
Yeah, it's been over a decade.
I mean, 1-2 lakhs of interest income in a city like Mumbai, Delhi, Pune, where real estate prices and rental incomes have gone. I think those need overhaul, actually, and absolute rethinking for the current reality. So part of it is expectation, part of it is a lot of hope, but I think you really need big, bold thinking on consumption.
Sorry, but where does the money come from for doing all of this?
So, look,
GST,
that's what I was going to say.
You're not getting that much.
Tax collections are up. They're not bad.
Okay.
And plus,
and by the way, I agree with him. I know Neeraj made a face when he talked about pushing out fiscal deficit targets.
I don't think it will happen.
I talked to my bond CIO, and usually bond market guys are fiscal deficit. He's like, this time if they let it slip a little bit in favor of growth, it's not such a bad thing. I would go that far.
उनको चलेगा.
नहीं, वो हो जाएगा. But my making a face is not about whether it should be done or no. My making a face is that I don't think it will happen. So that's
but
my
we have
point.
a right to be wishful now.
The point is, when you're giving your 12th budget, if you can't be bold and you still have 4 years to go,
Yeah.
See, that's an incentive.
then whom do we expect to give up out of the box reforms?
In fact,
Who else will do it?
In these circumstances, it should happen.
You still have 4 years to go.
Correct.
To do your course correction.
Parag bhai.
so for once is middle class, 100% I agree. Some relief has to be given through some way. I think tax, introducing the tax bucket and all, which Pankaj mentioned. I completely agree with Radhika on housing part, which I also mentioned earlier.
Yeah.
That housing tax, that deduction limit has to increase, because if you want to, as she said, right, that even if you want to buy a house in Bombay, what does that 2 lakh rupee deduction mean to you? So that has to, and remember, my center stage of my thinking is that right now we need demand acceleration in the country. Yeah. See, you can not just say that PLI, I'll give PLI, so plants are put. As I told you, electronics, demand was already there. And so you just balance it, that now you are not importing it, you are not increasing your current account deficit, and you are manufacturing it, which is a very good thing to do. But in some sectors, you need to create demand, right? If there is no demand for tractors, how Mahindra is going to put the plant? So to revive the capex cycle, private sector capex, I think you need to revive demand.
Maybe just one more point on this whole thing when we are discussing this. I think the highlight or the headline of the economic survey really acknowledges this. Deregulation. On one hand, we want to revive animal spirits in private sector. On one hand, we want to regulate. central governments, state governments just need to get out of the way. Just unleash the private sector.
This is what Chief Economic Advisor said yesterday.
Exactly.
Government,
so
please get
just
out of
get
the
out
way.
of the way.
Wow.
Let the private sector. These are corporates who can decide for themselves what is good and what is not good. Let the government not sit on judgment in terms of what you can do and how much you can do. Let people fail. Let companies fail. That's very much a part of the ecosystem.
I don't know if I'm a minority, but I'm not somehow so hopeful. I'm hoping I'm wrong here, and I'm hoping I'm here something like this. But
Vikas is not so rapid fire round, but okay.
No, I am with you on fiscal thing. Fiscal, I don't think so. They will compromise.
Okay, Vikas, what is the one thing that you think will happen this budget?
Common expectation is about the sort of personal income tax. But my important, point is that I think the FMs should also do something to get money towards the fixed deposits or to the banking system. I think because the tax rates and the previous incentives being removed, there's no more incentive to invest into fixed income, and that as a result of that, you have a very small amount of money going towards the banking system and credit side. And that, I think, if you ask me, is a very big risk today. And eventually, banks will give it to for the corporates, but most banks are struggling in the growth in the deposit, and that's where I think, in my opinion, some tax incentives should be brought back so that the middle class is incentivized to invest into credit products.
Yeah, I think, Vikas, it's an interesting point, right? We're just making this point that it's very rare to see a stock market enthusiast and investor talking about encouraging money or capital flow towards fixed deposits, but maybe because banking needs
That's
it.
the right thing to do for the economy.
Yeah. No, I get your point completely.
I mean, because Radhika is over here and she's like, if the money is going to go to FDs.
No, I'm actually not saying that.
Flow.
By the way, I have told, whenever I've had the opportunity, I've spoken to many people in government and said it's actually not about FD, but right now, today, what you've created, and look, I'm a mutual fund person, but you've created a situation where equities are at 12% long-term tax and fixed income is fully taxable, whether it's in the form of debt mutual fund or FD. It's a little bit of a wide gap from an asset allocation point of view. So you can rethink FD, but you can rethink debt mutual funds.
Radhika,
Neeraj isn't like
you
that.
just set the cat amongst the pigeons. I should have. Am I wearing green? Yes. I think me and Radhika are opposites today.
But she is not suggesting increase in the equity. She's suggesting reduction in the tax on
Never would I say that.
Now does that change?
No, I know she was not saying that.
I would never say that.
Exactly.
Just one more point on the fiscal deficit. Since we're discussing, or I made that point of letting go of fiscal deficit targets, probably the FM can borrow courage from US. Look at US. They're in 5th year of this economic cycle. Yeah? They are running 6% fiscal deficit.
Correct.
I understand that we don't have the privileges that US has of having a sovereign currency.
Yeah.
But if an economy like US is running 6% fiscal deficit in the 5th year economic cycle, I certainly think we can let go of 30-40 basis points to accelerate our growth.
Sir, okay,
And
little
just
poor
one
joke.
more thing.
Courage of the US is President Trump back again after promising to put tariffs everywhere.
Just one thing I wanted to say on this. See, disinvestment, we are not doing anything. We actually missed a bus of a huge PSU rally. Right? Huge PSU rally. IRCTC and Hindustan Zinc, if I add the government stake value at today's price, is 80,000 crore.
But that's off the table now because that's unpopular. So don't expect anything
what I'm
which is
saying is,
No, that
No, but
intent is
that's
clear.
been the grouse always, right?
No, but that intent is also clear. They do not want to let go of the family silver. The idea is let's fix it and run
Even
it.
state PSUs need to be looked at.
Yeah,
by the
but
way.
just the point that, we need to wrap, we need to slip into a break, but this has always been the grouse, and the government is not able to disinvest at the right valuation, which has always been the pain point. Don't think it's changing, unfortunately. But all of you, thank you so much for being with us today. It's great, this conversation that's happened today. Vikas, thank you so much for being with us on the show today as well. Really appreciate your time. We need to slip into a very quick break, but more budget coverage on the other side. Stay tuned.
This is the day that shapes the future of 1 billion dreams.
from the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policy.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard
All right, just about an hour to go for the big day. Live pictures coming in outside Parliament. Finance Minister Nirmala Sitharaman walking in with the budget document. This is the heightened expectations is very interesting this time round. We keep saying that budget is actually just a statement of accounts of the country. No, this time it's a statement that India is making to her people and to the world as well. Meanwhile, markets are up in anticipation. 23,557 on the Nifty. Not half bad for budget morning at all. The setup has been going on for the last couple of days as well. But look at some of the big movers this morning that we are seeing. Definitely the budget play in action can be seen very clearly. If you look at some of the fertilizer stocks that have been moving and IRB Infra that has been moving, KPI Green. So I would say more action in the broader markets than on the main line as well. Ashish Gupta joining us this morning, Chief Investment Officer, Axis AMC. Ashish, very good morning to you and thank you so much for your time on Budget Day. I know it's a Saturday. We're all up, awake in anticipation and excitement, waiting to see what happens. What is on top of your list of expectations?
Good morning, Tamanna. No, I think, as you said, this is an important budget. It's really the first full budget of the new term. And I think, to my mind, the fiscal deficit is really what we need to see the paths of consolidation continue. Of course, there are growth imperatives as well, but I think in the volatile global macro environment that we have, it is important that India continues to demonstrate its strong macro fundamentals. And it will be important that the government continues on the path that it had indicated last time, that in FY26, the fiscal deficit will drop below 4.5%. So I think that is the first part. And I think it is important also because this is needed to ensure that the cost of capital for the private sector continues to come down. So to my mind, that is the most important indicator. I know there are a lot of expectations around potential tax incentives to boost consumption. But to my mind, more than taxation changes, the focus has to be on improving non-tax revenues. And I think even your previous panel spoke about it, that how do we get the non-tax revenues up? Over the past few years, we have seen tax to GDP improve significantly, but non-tax revenues have not gone up. So I think if we can get some impetus on that, that will actually enable the government really to up spending and support growth.
Ashish, what's the best way to do that? Good morning, Neeraj here. What's the best way to do that, non-tax receipts? Because, I mean, the needs for funds are enormous. The ways to get them, very, very limited, right?
Sure. So I think divestments are really the only way, and it also need not be strategic divestment. It not just be letting go of control. Over the past few years, we have seen, given the improved profitability of many public sector enterprises, improved governance in many enterprises, there have been significant re-rating of these companies. Their valuations are in many sectors comparable to their private sector peers. So the government diluting their shareholding in these companies is something that is certainly possible. In fact, the government can actually also potentially look to go below 51% in many of the companies. But even if they continue to hold majority, there is still a significant room to raise resources, at least this year. But if that path has to be continued, I think then the government also has to think about in which corporations can they operate with below 51% shareholding.
Ashish, in your view, what would be the couple of big disappointments if they were to come, both from a market's perspective and even from an economy perspective?
I think, to my mind, first of all, I think the biggest thing I'm watching out is fiscal deficit. So if there is any kind of dilution in the paths of fiscal consolidation, that will be a disappointment. I know there are growth imperatives, but as I said, given how the global macro is set up, we don't want to give that signal. The second to my mind will be if there is any further changes in the tax structures, particularly direct tax structures, that because already in the last couple of years there have been significant changes. So I think too much tinkering around doesn't really help. You need the new tax regime to stabilize rather than make very frequent changes.
Okay. Ashish, just a word on what has been the big talking point, right? That fisc deficit number, which at 4.9 is a given. Now, assuming that the receipt picture is yes, not looking all that great, but the capex done or the expenditures done have also kind of lagged this time.
Yeah.
If the fisc deficit number for the current year is at 4.8 and she sticks to the glide path or improves upon it, normally it would be a positive. But in this case, would the markets be disappointed with it? Because that would mean that the government is steadfastly on the fiscal consolidation path at the expense of spending on economy, because currently the economy needs some bit of boost to revive demand. So would a aggressive fisc consolidation be looked upon as a negative as opposed to a positive, or not so?
Sure. So I think if the fisc consolidation is much more aggressive than the 4.4, 4.5% that has been indicated, yes, I think that will also be seen as potentially a negative signal from a growth perspective, because we know actually it is government spend that has been a key driver for growth for the last 4 or 5 years, including on the investment side. And given the fact that you have, so actually, as you rightly said, FY25, 4.8, 4.9% is very easily achievable, right? So I don't think there are going to be too many surprises there. And whether FY25 ends at 4.8 or 4.9, it does not really matter from a growth perspective because that is already in the past. So it is really what is the FY26 government expenditure that is going to come through? Is it going to grow in double digits or not? That is the key that we have to watch out for.
Okay. Ashish, in terms of what budget can do from a capital markets perspective, we've been speaking about economy, we've been speaking about consumption, but purely from a capital markets perspective today, what would you say is the top factor that will give some relief?
Frankly, some of the challenges that the government has this time around. So in the past couple of years, the government has had very good tax buoyancy. So if you see every year, tax revenues have grown faster than the GDP growth. And that has enabled the government to really up the capex spend and overall expenditure. I don't think the market is expecting that flexibility to be available this year. So in that sense, the expectations from the budgets are not very high. Capex growth, we still expect to be in double digit, but as Neeraj highlighted earlier, it is coming on back of the fact that FY25 capex spend probably will be lower than what was budgeted. Right? So from revised estimates, you will have a double-digit growth, but if you potentially look budget estimate to budget estimate, you might not have a double-digit growth. While there has been asked for some boost to consumption, some measures to boost consumption coming from the budget, but I don't think markets have really kind of priced in that, or so if you see the market behavior, price actions over the past few weeks, it is not as if market is going into the budget with some very high expectation. So I think as long as there's no big disappointment in the budget, we don't think there should be too much negativity, even if there's no fresh big bang measure to boost consumption.
Thank you so much, Ashish. Ashish Gupta there from Axis AMC on what is expected from the budget, and hope you have a great rest of the day. We're waiting and watching. Just about 45 minutes ought to go for the budget speech to start. But meanwhile, quick look at the markets and what's buzzing at this point. Mahima is joining us with a list of top buzzers in trade right now. Mahima.
Right, so it's a mix of stocks which are buzzing on the back of earnings, as well as, pre-budget, there are some trades being taken in certain sectors. To start with, Idea Forge is the top gainer today, buzzing ahead of budget, and the stock did see a significant tanking post its earning. So there is some, buying there seen. Now the second one is Prestige Estates. This is on the back of a Jefferies note, which has upgraded Prestige Estates to buy from underperform and has raised the target price to 1600 versus 1420 earlier. What they're saying is that the large capex program is on track for the company and providing headroom for scale up going ahead. The next one on the list is MedPlus Health Services. This is buzzing on the back of its earnings again. Margin expansion was on account of increased contribution from private labels, is because of which the stock is buzzing in trade today. The next one is Inox Wind, again on the back of earnings, where revenue was up 81%, EBITDA up 123%. Margins have improved from 18.4 to 22.7. Net profit up 116 from a 1 crore amount. In terms of why the EBITDA has seen such a uptick, 82% YOY jump in execution of a 189 megawatt. There was an inventory reversal of around 364 crore and 28% annual drop in EPC, O&M and common infra expenses has taken place. Another set of stocks that is buzzing in trade today is the railway stocks. This is ahead of budget, of course. SJVN, Jupiter Wagons, Titagarh are all buzzing. one separate set of stocks that are buzzing are on the back of potential support for battery energy could have some space in the budget today, which is why we are seeing an uptick in JSW Energy, Tata Power, NHPC, Vari Energies, Adani Green, Amara Raja and Exide Industries. Now these are the top gainers of course, but we also have some top losers. The first one being Aster DM on the back of numbers. Well, their profit was around down due to one-off merger expense, which is why it's seeing hit. Otherwise the numbers were in line. The revenue was up 10%, EBITDA up 25%, and margins have improved from 15.9 to 18%. The second one is 5-star business, which is taking a hit in trade today, where net profit was up around 26% and total income was up around 28%. And lastly, Karnataka Bank is also seeing some profit booking in trade today after its earnings, where net profit was around 284 crore versus 331 crore. Gross NPA at 3.11%, net NPA at 1.4%, and the net interest income was down by 4%, which is why we are seeing a downtick in that particular stock. So all of these counters either in green or red, but are buzzing today.
Okay, so a lot of buzzers. One of them is actually Wockhardt as well. Let's pull up the Wockhardt stock because it's their new super hit Zenic, which has got a nod and will go into second phase of clinical trials. In fact, we spoke exclusively with Wockhardt chairman Habil Khorakiwala on this wonder drug Zenic. Listen in.
We have just completed phase 3 clinical trial, and this clinical trial establishes Zenic is a superior treatment, which is very rare happening in antibiotic or any drugs. Second is that we should be expecting this drug to launch in India by early next year, and in US maybe middle of next year, because we will be filing in US sometime in middle of this year, and then we expect sometime in the middle of next year to receive approval.
All right, now to our budget masters who are with us in the studio and will be with us through the budget speech and will tell us, based on their expectations that they'll lay out right now, how did the budget fare, if you will. Pranav Sehta, National Leader, International Tax and Transaction Services, EY. Mihir Vora, CIO of Trust Mutual Fund. Both of them with us in the studios. Gentlemen, both of you, thank you so much for joining in. Really appreciate your time. There was a hot debate around what is it that the budget can do within the limited space does it have. Can it overshoot the fiscal deficit target a little bit in order to spur capex demand, etc.? Mihir, initial thoughts.
See, I think there is limited, space for the government to maneuver, especially given the fact that we need to balance investments and infrastructure, etc., versus boosting consumption. So there is a fine balance to be maintained. The good thing is that, at least from the stock market point of view, till say the middle of yesterday, there wasn't much of expectations. Markets have been kind of discounting a lot of slowdown, etc. And just because the Prime Minister made some good comments on the middle class, there was a bit of expectation. But apart from that, I don't think we are going in with too many expectations in the budget. So no bad news will be good news, I would say. Okay. In the budget, and anything else will be a bonus.
I find this interesting. So you're linking that comment. And if you have that soundbite, we should quickly play it as well, where Prime Minister talked about how Goddess Lakshmi will shower her blessings on the middle class as a kind of trigger for the market, that there is going to be a big boost for consumption. Is that the biggest ask right now, Mihir?
I think that's not the biggest ask, because as far as consumption is concerned, for the rural masses, states are already doing a lot. All the 12 states which have introduced different schemes for women, etc., all put together is already 2 lakh crores of stimulus. They are almost 0.6% of the GDP, which is already being given to women as stimulus. So I think rural-wise, the centre doesn't need to do much in any case.
There are enough of those Ladli, Behna and
so
all those schemes. So
that's almost 2 lakh crores on annualized basis. So that's a decent stimulus in any case. For the urban middle class, what can be beneficial is you do see some tax breaks, etc. Because we are seeing some signs of stress in the urban consumption thing. So anything which boosts sentiment for the urban middle class will be good. But I think more important to see is whether the thrust on central government capex continues, because that's been one of the big drivers of the economy for the last 5 years. We've almost seen 25 to 30% compounded growth in capex spending since 2020, and that's been one of the pillars why we could come over the corona slowdown. I think that still needs to continue because the private sector still hasn't kicked in to the extent required. So a continuation of schemes of government schemes on railways, roads, defense, etc., plus more sectors and larger outlays for the PLI schemes is something that would be more important in my view.
I'm just going to play out that sound clip from Prime Minister, and then we'll ask Pranav Saita whether there is enough space and what is the possibility of those tax cuts we're all anticipating.
मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है।
Okay, so a couple of things that we need to talk about. I think on the personal tax front as well as I would say on indirect taxes, the tariff response as well. So Pranav Saita, let me start by asking you about the personal tax front and this idea that the boost to consumption can come with some tax tinkering. We've seen, and tinkering is the word, very, very little here and there, which doesn't actually do much for consumption.
Yeah, I think it's more about the sentiment and the expectation than much ahead of that. But I do feel that something will be done in terms of helping the middle class get a little more boost to consumption. May not be very significant in the ultimate analysis on the pocket of the middle class, but still that helps in terms of the sentiment, as well as the fact that the government is thinking about them. And that's, I think, one thing that will happen. I also do feel that to some extent there will be an impetus given to Make in India, maybe through PLI, indirect taxes, schemes and so on, or maybe through some amount of restoration of a concessional tax regime on manufacturing. I do hope that comes. Since we are talking of expectations, I do hope that something that comes, because across the world we are seeing an impetus being given to domestic manufacturing and so on. So I do feel that will help to a large extent.
Which sectors do you think there's a possibility of seeing this in?
I would feel that this might be across the board, but at least in sectors which can promote a lot of employment generation or job creation. I think that's one thing that the government will want to focus on, to somehow bring about that animal spirits back again. And unless manufacturing is given that fillip, job creation is not going to be easy given our demographics. So I do hope and feel that that's something that they will also focus on.
Mr. Saita, good morning, of course, and it's always great having you. All right.
Sure.
Just wondering, one of the problems for the capital markets has been the incessant outflows. Now, taxation changes can't change that. It needs to be economic conditions. Right. But taxation changes at the margin influence whether or not there are enough incentives out there or disincentives to come in or go out, right? Is there anything that you hope, or is there anything that you fear in the budget, fine print or otherwise, that could have a bearing on this?
I hope not. In fact, I do feel that if they maintain the stability, consistency, clarity, and providing certainty, investments will come in. The chief thing here is to ensure that there is ease of doing business. That's, I think, where the second generation of reforms is really required. Because unless, and the economic survey speaks so much about it, deregulation. I think if that's what happens and the government capex on infrastructure keeps up, which over the last 8-10 months has been a little muted, I think those two things, deregulation and providing the right kind of infrastructure, will be the best fillip that one can give to investments, both foreign as well as domestic investors. Otherwise, even Indian businessmen probably will invest more abroad than in India, is what we are seeing these days. So I do feel that that's something that will be very important. One, keeping the regime stable and predictable, which I think the government has done a good job so far and will continue to do that. Second, capex, which has been great over the last few years, but the last 8-10 months have been really very tepid, and that I think needs to pick up, government capex infrastructure building.
And third is, as I said, to some extent ensuring that deregulation and the next generation of reforms, for which also I think that taking states along will also be very important and critical. So somehow building that consensus which they built, I think when they brought in GST to a large extent, that consensus building and taking states along, because that's where a lot of the next generation of reforms will have to come as well from, whether it is land, labor, some of the infrastructure and so on and so forth.
That's an important point because in some sense, what states do or don't do has a large bearing right now on how the economy does, because there is a red alert out there on the fiscal health of a lot of states who are doling out freebies currently in order for political compulsions, if you will. So what to your mind is arguably one of the most important things to watch out for from this perspective in the budget, if at all?
See, as I said, ease of doing business can't be addressed in the budget. It has to be built, based on consensus and taking the states along. I think, but even more important is how to eliminate the real grassroots level harassments. I think that's a key part of ease of doing business, and that's what needs to be addressed in terms of, I don't know, governance structures or reforms, anti-corruption movement. So, in fact, if that improves, I don't even think we need PLI. So PLI essentially directly or indirectly is a cost of or trying to make up for all these inefficiencies at the grassroots level. So I think that would probably require more of a mindset change rather than any thing in the budget or fiscal incentives, I would say.
Yeah, but just to that point, Neeraj, now either you look at subsidies as a red flag or you look at them as a consumption boost. Because in the course of this conversation, we've ended up looking at it both ways. For now, at least, if that's what's propping up the economy to some extent, wouldn't that at least be a positive from a market's perspective?
See, subsidies are now going to be a global phenomenon in my view.
A global
phenomenon, because I think the end game everywhere is the world, especially the developed countries, are so much deep in debt that the only way out structurally is to inflate their way out of the problems, whether it's the US or Europe, anything, right? Which will mean that you will see asset prices, continue to be high. Inflation will be there structurally as a sticky way, and which will mean that the lower income category, population will have to be directly or indirectly subsidized, whether it's UBI or as we saw in COVID, the US was giving $1,000 checks to people. I think that will have to continue because inflation is going to be sticky, especially in the places where you have seen so much debt building up. Even, for example, President Trump's measures to introduce import duties will, initially at least, till the time you have US ramping up its own manufacturing, initially it will be inflationary in nature. So that's going to be a structural issue. As we speak, in the last couple of months, again we have seen food grains, etc., prices go up. FMCG companies already talking about raw material price increases.
Yeah.
So I think inflation is not going to go away in a hurry, which means that subsidies will be a structural part of any economy.
No, just on the tariffs bit, and I wanted to get your view, Mr. Saita, because we did a story that we're expecting in this budget a custom duty drop on 7 to 8 items imported from the US. It's, in a sense, perhaps you can look at it as a preemptive move as all of this tariff talk goes on. What does India need to do to be on the right side of this tariff trade war, this global tariff war which is going to erupt?
I would feel that yes, some definitely signals might come along, but primarily anything that we do will be measured. I would feel we would wait for what exactly US comes up with, and I don't think India is on the top of the list of countries which will face the heat of tariffs.
Yeah.
So we would wait, I think, to see how it goes along. But yes, any and every items which are primarily inputs where India is value adding on that and sending out again, particularly, I think that's where we will see definitely tariffs coming down.
I think our fight is not really with the US.
Yeah.
The duties have to be with China, right? Imports from China is the bigger one.
Yeah, but just that, I think, so we've done a small exclusive 3-4 days back. It's a very small, tiny item, but 7 or 8 key items from the US might see some bit of duty changes.
Right.
Maybe it's ahead of the Trump-Modi meet or Modi-Trump meet, as the case
Symbolic.
may be. Symbolic in nature, but yeah, something like that to come out as well. So pretty interesting things that might happen.
Yeah. Ramdev Agarwal joining us on the conversation this morning, Chairman and co-founder of Motilal Oswal Financial Services. Mr. Agarwal, thank you so much for speaking with us here at NDTV Profit. Absolute pleasure on what is turning out to be perhaps an exciting morning, more optimistic than we would have thought at the start of this week.
Hello, yeah. Good morning. So clearly things are kind of evenly balanced, and there's a lot of hope that the FM is going to shower goodies for the middle class and women class. That looks to be what even PM's expectation is. So I would think that the commitment to what you call Viksit Bharat, that's coming out very clearly, and one of the ways to increase the GDP growth rate from say 6.5% to maybe 7.5% would be the giving some kind of incentive to the middle class for consumption. That looks to be the theme right now.
And do you think that that's the single most important perspective? I'm just wondering, on a budget morning, and we're speaking half an hour before the budget, what does a Ramdev Agarwal have on his checklist to look at? Will you be looking at the capex figure, the fiscal deficit figure? What is the top point that you're looking at?
Yeah, so I've noted down 3 points. One is the middle class. What exactly they end up doing for the middle class, and where FM has said clearly, PM knows what exactly is going to come. So his wishes are around middle class and women class and poor. So clearly we are going to see some bundle of measures out there. Whether it stands up to anything in the market or not, that's one thing. Second is the commitment to 8% growth, whatever it takes. I mean, it is for the leadership to say that we are committed to 8% year on year. There will always be some cost here and there, but growth solves a lot of problems. So how committed they are, bureaucracy as well as the policymakers and leadership, to 8% thing. Third, the credit flow. I think one of the biggest things which has hurt the economy in last 12 months, in my limited understanding, is the credit flow into the entire economy, which has come down from 15-16% to 10-12%. If we remain at 10-11%, do whatever, I don't think we'll ever touch 6.5%. That's my sense.
Okay. Mr. Agarwal, good morning. Neeraj here. I love the backdrop, budget bullets. Maybe dodge any bullets that might come our way if they do. But here's my question, sir. One of the things that some of the panelists have stated today, of course, the unequivocal focus on growth, and therefore, if the FM and the government, or the FM in her wisdom, decides to deviate a little bit from the fiscal glide path, if that shows an intent to invest for growth or creating demand. So if the next year's number is not 4.5, right, and it says that it is being done to stimulate growth, will the markets take it well, or will the markets be disappointed?
I don't know about the market, but I'll be very happy. In the sense that, to me, growth is paramount, and if you can do fiscal, to me, if you can do the growth and then consolidate fiscally, that will be very good. But I would not put fiscal consolidation as a priority over the growth. Because once growth comes, even fiscal consolidation is possible, because your tax revenues, they get boosted.
Okay, that's one. And something that I'll ask Meer Vora also, but just a follow-up question to that, Mr. Agarwal. We want to do a lot of things. There is very limited resources